Welcome back. Titan Q3 numbers are up for you on your screen. The company's delivered a 30.5% revenue growth. The number is just above 9,500 crores. So that's slightly better than what the street was anticipating. The profit number at close to about 990 crores is also better than what the street was anticipating. It's a growth of 136%, and margins too for the company have expanded to 14.7%. So Titan has beaten street expectations when it comes to the profit, I think, compared to the margins as well as compared to the profitability as well. And the stock is reacting positively. As you can see, EBITDA margins at 14.7%, ahead of expectations of 12.9%. And the bottom line, the net profit at nearly 990 crores is an improvement of 136 basis points and much better than the consensus expectations of 840 crore. Now, Q3 was a good quarter for Titan Industries, considering that the economy had unlocked, weddings were taking place in full force, the restrictions on the number of people had also come down. Jewelry buying was strong. Jewelry revenues, according to the company's pre-quarter update, was up 37%. And it's surprising, right? Titan has beaten expectations, considering that they give you a pre-quarter update, so the street anyway knows what to expect. And they were expecting a strong quarter. But look at these numbers, 30% in terms of a revenue growth, a bottom line increase of 136%, margin expansion, a solid margin expansion. And I think even the management commentary is fairly upbeat and bullish, because they're saying this has been one of the best quarters for the company in terms of profitability. So at a time when most companies have reported margin pressure, Titan has actually gone ahead and improved their margins on a year-on-year basis. The stock is reacting positively to these earnings. You can see that uptick, but there has been a sharp reversal of those gains as well. So we'll just try and digest those numbers. In the meanwhile, we'll get in some reactions. Naveen Kulkarni, the CIO of Axis Securities, joins us on the phone line. Naveen, anything in the numbers? The stock initially reacted positively, but then has quickly reversed those gains. Are we missing something?
No, I don't think so. I think, see, typically Titan's performance was known because of the update that they provide. So revenue numbers, more or less, people understand. The only question is that of margins. So margins have come out to be reasonably strong, as in at least the headline number that I'm looking at looks to be reasonably strong. It's beaten the estimates. And at least the 14.7% margin looks very, very strong to me. So it could only be pre-positioning, probably heavier position. That could be the impact. But I think the commentary will be more important, and what's happening in the current quarter, and whether these numbers or the margins are sustainable or not. That's the, I think, key here.
Naveen, just an update on the commentary. There's a small statement that the management has made. They say that the festive purchase in the quarter has driven Titan's strong growth in all businesses of the company. And as we already know, it has turned out to be one of the best quarters. They say while the onset of COVID wave 3 has slowed down the strong momentum, the company is hopeful of ending the year on a positive note. So yes, there could have been some impact, something that you said we'll get to know in the commentary as well. But Naveen, at 73 times 1 year forward earnings, what is your take on the stock? You think there is more upside from here on, because the stock is just 12% away from its record high levels?
Yes, so upside for the consumer discretionary companies is kind of limited, considering the run-up that they have had. However, having said that, I think more importantly, it's very difficult to find businesses which can compound the way that Titan can continue to grow, right? So that's the only I would say that positive factor which can support the valuations. Otherwise, valuations are clearly stretched. So upside, I would say that from these levels seems to be little limited in my view.
Naveen, according to you, what could be the possible reason for this margin expansion of 240 basis points on a year-on-year basis? The revenue performance is in line, and it's bang in line with what the company had indicated in its pre-quarter update. A jewelry growth of about 37%, watches growth of 29%, eyewear growth of 26%. The revenue growth numbers we know. So what, according to you, could explain this margin beat and this improvement on a year-on-year basis?
Yeah, so clearly what has happened is that the Q3 numbers, there is a lot of bunching up which has happened, of sales because of let's say that I would say that wedding and all were the key factors why there would have been a lot of bunching of sales which would have happened in Q3. And that has resulted in operating leverage is what I believe is the key reason for the margin expansion in the quarter. So that's why I'm saying more or less going ahead, the margins could normalize from the high 14.7%. So it's difficult to imagine that in jewelry business, these kind of margins can sustain for a very long period. So that's my initial reading on the numbers.
Okay, Naveen, thanks a lot for that analysis. In fact, we also have Shirish Pardeshi of Centrum Broking joining us now to give his take on Titan's Q3 numbers. Shirish, good afternoon. Thanks a lot for joining us. Well, it's a top-down beat and we have seen margins improving, so that's the big highlight. What is your take on the numbers? And the management does say that wave 3 has impacted business a little bit, but going forward they expect some positive momentum to continue. What's your take on the numbers?
I think numbers came in line slightly ahead of our expectation on jewelry. We were expecting about 35% growth, while it came in at 37%. So two important things what we have seen, or while during our channel checks, what we found. One is definitely there is a bunching up of marriages which got deferred from last year over this year. General sentiments before the third wave panned out into the metros and semi-metros, the consumer mood was very high. And I think that has reflected in terms of gifting or in terms of jewelry business. Both are in tandem, has shown a very strong growth. Jewelry has grown 37% and watches has grown 29%. However, the intervention in terms of product and the channel mix which company has taken started showing up in the eyewear business. And I think even that business has grown almost 26%. In terms of margin, yes, margin has come ahead of our expectation. What I've been trying to understand is that maybe that could be two factors. One is that the North India has seen a very strong momentum in terms of studded portion. And of course, the bullion sale, which was been pulling down the business, might have not seen that kind of momentum. The third thing from here onwards, we have a pretty strong view on discretionary part of the business, and this we have seen all the discretionary categories has outperformed in the quarter which has gone by. So we would continue to see that the consumer sentiments are very strong. Second thing, which is more importantly, I think the younger audience is also looking at so-called the lightweight jewelry, and I think that is one of the good traction which company would have seen in terms of its business in the fast fashion jewelry business.
Shirish, Naveen, thank you very much for joining in. So that is Titan for you. For those of you who've just tuned in, the company has reported a beat in its Q3 performance on margins as well as profitability. Revenue growth 30%, margins have improved to 40 basis points, and the profits are up 136%. But the stock, as you can see, has slipped from the high point of the day. One, as the experts are saying, perhaps the margins may not sustain at that 14.7% level that we've seen in Q3. Q3 may have benefited from the bunching up of sales, and the management commentary does indicate that Q4 has seen some slowdown, at least at the onset of it, due to the COVID third wave, and plus the stock is trading at a 73 times forward multiple. So it is, of course, amongst the expensive ones. We'll slip into a very short break on that note. We'll come back with more on the markets.